And it's something you should know about for a lot of different reasons, including your fundability and including the fact that with all this banking craziness, this could be something that can really help you. So today we are diving into neobanking. I said neobanking, and we're going to be talking about the next wave in banking and what neobanking is, what you need to know about neobanking, how it affects you, how you can use neobanking to improve your ability to get funding or become more fundable. And look, let's be honest, this is a hot topic right now you need to know about because the banking industry in itself is in a little bit of turmoil right now. And neobanking may actually be the exact solution that you're looking for. So I think it's interesting because when we talk about banking in general, we've seen a lot of shifts, right? First of all, when it comes to money in general, banks used to be the behemoths that we dealt with, right? If we wanted money for our business, we went to the banks and they gave us, for example, SBA-backed loans. And that accounted for 90% plus of all financing that took place. Then 2008 mortgage crisis happened. And what happened then was a law came into effect called Dodd-Frank. And Dodd-Frank made the banks tighten up. It was harder to get money. Then we saw this explosion of fintech lenders in the space. And now there's all these alternative lenders online offering way easier solutions for like you and I to get money because now they'll give us money based on our cash flow only or our collateral only or our credit only. And it's not taking everything to account like we've always seen banks done in the past. So now we see this neobanking coming into play. And this is kind of the newest shift we've seen over the last 15 years in banking. And the timing has nothing to do with the failure of several banks that we're seeing around the world, including Credit Suisse. But again, the timing is kind of perfect because it offers us a solution to normal banks that we're used to dealing with, whether it be fintech online or whether it be conventional banks. By the way, if you're just coming in, tell me where you're coming in from. I'd love to give you a shout out and say hello, even give me your company name, and I'll mention it right here on the stream. So first of all, let's talk about the topic at hand. We've got to get banking figured out for our business. It's super, super important. As a matter of fact, this is about this in relation to like this is how important people think it is to how important it is. That's a horrible assessment. But let me explain to you what I mean. Let's talk about the importance of banking in general. First of all, having a business bank account is a massive sign of credibility for your business. If you are using a personal bank account versus a business bank account, there's very rarely a lender out there you'll find that wants to do business with you in general. So if you want to get money for your business, loans, credit lines, credit cards, you need to get a business bank account open. Even a lot of business credit cards ask for a bank reference to make sure you have a business bank account open. So having a business bank account, very important to the overall fundability, lendability, credibility of your overall business. But there's more to this too. First of all, there's two secret credit scores a lot of business owners don't even know about. One is called the bank rating. You'll never see your bank rating. You'll never know about it. You'll never be told what it is. No banker will ever mention it to you. You can go into the front officers of the bank or the whatever you call the bankers. We'll call them bankers. The bankers at the bank and ask them. They won't even be able to tell you. This is something deep in the underwriting of these lenders that they use that most people don't know anything about. And a bank rating is basically a scale of a low 4, mid 4, high 4, low 5, mid 5, high 5 that rates basically how you manage your bank account, basically. The majority of the score, the heaviest weight of the score, has to do with how much money you keep on average in that bank account. Now, to go into a banking and an SBA loan, they want you to have a low 5 rating, which is a minimum of 10 grand in your bank account over a 90-day period. This matters because if I'm going to go get an SBA loan, then what I'm going to do is a quarter before, 90 days before, I'm going to put and keep as much cash in that bank account as possible. And that's going to give me the highest bank rating, and it's going to improve my ability to get financing and help me get more money at better terms. Okay, now the highest bank rating you can get is 75 grand. If you keep 75 grand on average in your bank account for 90 days, then that gives you the highest bank rating. So if you go into a bank, conventional bank, Bank of America, Chase, Regions, or whatever it may be, they are the ones that if you want loans and credit lines and even credit cards, they're going to look at that bank rating. It matters. Now, if we look at fintech lenders, it doesn't. Online lenders that give us money, we don't care about that. But they do look at bank ratings with the big banks. The next thing we want to look at is we want to look at what's called check systems. And check systems is important as well. A lot of people don't realize that you have a secret credit score that just looks at how you manage your bank account history. Do you have non-sufficient funds? Do you overdraw the account? Do you have a positive ending bank balance? Do you have a bunch of deposits? How old is your bank account? All these things tie in to your check systems credit score and report. Here, you want to get it for free. I'll go ahead and pull that up for you right now. Actually, I don't know if it's still here or not, but I created a free page for you to do everything you need to know about check systems. Let's see if it's still up on our website. Maybe it is. It is. It's up here. I'm going to show it to you right now. Secret page. Don't show this to anybody. Okay, so if you go to creditsuite.com/check systems, I'm going to type this into chat right now. Okay, into your chat. Bam, bam, bam. Oh, and by the way, before I go to show you this, Bronx Pedro's in the house from the Bronx, Kemp, Washington, and Dallas, Texas. Thanks for coming in. And yes, Business Solutions from Dallas, Texas. Encore Business Solutions from Houston, Texas. Sean from Charlotte, Payne Solution Services LLC. SoCal 3G Business Consulting LLC. KN, welcome back to the stream, KN. Thanks for coming in. Okay, so I'm going to go to creditsuite.com/check systems. Here's how you spell check systems. And I built this page that I think is a really powerful resource for you. It's 100% free. What it lets you to do is it lets you get your check systems report. You can get your check system score for free. You can lift a security freeze, add a security freeze, add a security alert, even dispute stuff on your check systems credit report. So now you can access your check systems credit report. You can access your check systems credit scores, and you can actually see like what's going on, what lenders or know about you that you don't know they know. And by the way, that's why I'm here, right? Because what happened for me in my world was that I lost everything because I personally guaranteed business debts. The debtors came and took all the money out of my personal accounts, ruined my personal credit. And I thought, man, I'm going to figure out how the system works and teach people. Little did I know that was 12 what would happen after that. I didn't realize this whole world behind the scenes of lenders, where they get their data, how they have these secret credit reports, how they use these secret credit scores. I thought the game was fair. I was wrong. I thought the game was we went to apply for a loan, we got approved for a loan. It was simple. It's not fair. It's rigged. They use all of this data that we don't even know that exists about us to make decisions that we want to be favorable, but oftentimes aren't favorable. Here's the fantastic news. Just by being a subscriber, you learn about stuff like check systems. And in doing so, you gain the unfair advantage. They secretly don't think you know this report exists. They don't think you know how the score exists. They don't think you know how to dispute the information, right? But now you do. So now you can kind of legally and ethically manipulate's a bad word, but I like it. Manipulate the reports to your favor by disputing inaccurate information that shouldn't be there, improve your overall check systems report. And now when you go to get loans, they look at it and they see what they want to see to feel comfortable to give you money. Okay, so this is why we need to know about it. It's why banking is important. But when we talk about that, let's talk about what neobanks are. Well, neobanks, they're sometimes referred to as challenger banks. And they're basically like fintech firms. So fintech, they deal with software, right? They deal with apps, they deal with software and other technologies. And then what they're basically doing is they're like streamlining mobile and online platforms. So these neobanks are basically online banks. But in a lot of cases, they're not banks. They're actually fintech companies. They're software companies. They're app developer type companies as well. And then what happens is these fintechs generally basically specialize in particular financial products. So sometimes it's just a checking and a savings account. But sometimes it's something more. Sometimes it's dashboards and metrics that you're using to actually track overall the financial health of your business. There's a lot of different solutions. I actually just went to a massive banking conference in Las Vegas a month ago, and a lot of neobanks were there, and they're out there selling software and tech to even the big banks with dashboards and health tracking for businesses, et cetera, things like that. Now, these neobanks tend to kind of be more nimble. They tend to be more transparent than the Chase, the Bank of America, their big mega bank counterparts, even though a lot of them partner in such institutions to ensure their financial products, right? So when we look at banking, we look at what's called FDIC insured. We need to make sure it's insured by the government that we get our money back. But what a lot of people don't know is that there's limitations on that. There's only certain amounts of money, and I should know this. I swear I should know this, and I don't. And I'm going to learn it. Let's learn it together right now. So the reality is, I should know how much the FDIC does insure, and I don't know that off the top of it. I think it's a 250,000 in your bank account. Oh, it's 250,000. Yeah. I'm so happy. I thought I was right, but I didn't know I was. So FDIC insured means that if I have $1 million in my bank account and a bank goes out of business, and we hear it's FDIC insured, we think we're getting our money back. We don't. We get 250,000 of our money back. That's it. So a lot of my friends are calling me during this time and they're saying, Ty, should I diversify my money across different banks? I'm like, yeah, absolutely you should. You've only gotten a certain amount FDI insured. So if you're sitting $1 million in a bank and that bank goes out of business, you'll get 250,000 back. You're out the other $750,000. So first of all, we don't want to feel secure by these FDIC being insured because they only insure 250,000. Now we know that. We solidified that. I thought I knew, but now I have the final answer. So these neobanks do sometimes work with the big bank counterparts because they're getting that FDIC insurance to make sure that if they ever go out of business, you have some kind of guarantee. We now know that guarantee is limited for only 250 grand. The other thing to keep in mind is that these neobanks do a lot of other stuff too. First of all, a lot of their banking is online. So it makes it easy to work with. A lot of them deal with crypto and other types of things other than just cash, which other banks don't deal with. A lot of their services we can enroll online. We can get their other products and services online. We don't have to go in to banking institutions anymore. So a lot of times they're easier to work with. They're more nimble. They're easier to sometimes get financing for. They're easier to set up. They're easier to work with, and they're more transparent. And that's why we're seeing these younger generations especially shift to neobanking versus the big banks, because the reality is this lack of transparency is creating a lot of problems now that we're seeing a lot of banks start to fail, small banks and even large banks as well. So what do they offer? I said they offer more than just checking and savings accounts. They offer a lot of other services as well. And by the way, if you're just coming in, give me a shout out. Luciana just did. Benita just came in and said hello. L. Parker said hello. And by the way, tell me where you're coming in from. If you tell me your company name, I'll give you a shout out right here. And if you also tell me like the state you're in, I'll give you a shout out as well. So give me a shout out. So neobanks, we now know what they are. They're basically fintech companies that offer sometimes just banking, sometimes other services, and they allow you to do everything online versus the big banks. We also know sometimes that they work with big banks to get government insured. That's kind of where we are at this point. But they also offer other services as well. And what other services they offer depend on really two types of neobanks. We have what's called a full stack, like a full product stack we can think of. And then we have what's called front end. So a full stack is basically like it's a standalone bank. It has its own banking license and it can operate completely independently. It is a bank. So a full stack bank is a different bank. It's got its own banking charter. It's got its own banking license. It can completely stand independently on its own. It does not need to rely on a bigger bank. It does not need to rely on an incumbent bank. It doesn't need to rely on a Chase or a Bank of America for its insurance, etc. These full stack neobanks can completely stand on its own, and it can offer normal banking services like a regular big bank can. Now, they can also offer a full customer service experience as well. So everything we could think about from a big bank, money market accounts, checking accounts, savings accounts, debit cards, all the stuff we think about from a traditional bank, these full stack neobanks do. They just do it online. They don't have these locations everywhere. And as a result of that, it often ends up working in our best interest because they're not dumping all their money into all these locations and the retail building of all these banks and the manpower it takes to man all these banks for the hours they're open like we see brick and mortar banks. So there's a lot of benefits. It's oftentimes cheaper to open an account. They've less fees involved. They're just easier to work with. Then we have the second kind of neobank besides front stack, besides full stack. And these are called front end neobanks. And basically, they don't have their own banking charter. They don't have their own banking license. They basically partner with a regular traditional bank or sometimes what are called as legacy banks, Bank of America, Chase, for example, and they provide digital banking services to their customers. So what's happening now is that neobanking is becoming so popular that now what's happening is instead of all these full stack banks that work just like normal banks have licensing, now we have these other front end where they still offer some additional products, they still offer some additional services, they still offer access to online banking. But again, they're backed by a regular bank. They have to partner with another bank. They don't have their banking charter. They don't have a separate banking license. They're just a fintech company, like a software company that offers solutions for you, like the apps and the experience for you to go online, but they don't necessarily offer the banking services themselves. The banking services are offered by a big brick and mortar conventional bank, to kind of give you an idea. And by the way, Coach Kaimi, I think it's Kaimi or Kaim. Thanks for coming in and saying hello. Okay, so let's talk about a few of these examples. First of all, the top 3 neobanks for business. The first is called Lili. Lili. You can go to lili.co. lili.co. They offer business banking, but then they offer additional services as well. They offer bookkeeping. They offer unlimited invoices and payments. They offer financial reports, tax planning tools on an all-in-one platform. So what we're seeing is we're seeing software and app technology be developed that offers banking services. And then we're also seeing it has these additional things that we don't see from normal banks, right? We don't usually see the ability to handle invoices and bookkeeping and financial reports, but Lili has all of that stuff. Now, if we look at one of the top, the other top, there are 2 of the top 3, we then look at Revolut, Revolut, Revolut. I pronounced that correctly. If the CEO calls me, it's my fault. My apology. Revolut. Revolut. You can go to www.revolut.com. Now, they basically deal with technology that deals with spending management, currency exchange, crypto as well. And they also accept payments from payment QR codes, invoices, payroll, as well as other things. So we can start to see what neobanking really is here. Now we're starting to see that we've got these banks that offer services that we're used to, and now we've got some that are offering bookkeeping and invoice handling and financial reports. Others are now letting us deal with crypto and giving us QR codes to be able to accept payments and handle invoices and handle payroll. So now we're starting to see more solutions offered from these neobanks than what we find with the big banks. And then the third top 3 for business includes Oxygen, and that's oxygen.us. oxygen.us. So oxygen.us, now they're basically freelancer friendly. So they like freelancers. A lot of freelancers have a hard time opening business bank accounts at the big banks, but Oxygen really specializes in that. They don't have any overdraft fees as well. So again, when we're launching businesses, we oftentimes overdraw our account. I mean, it's just part of what we go through to build our businesses initially. So they have no overdraft fees, which is nice. They help you set up an LLC, so to create new LLCs. We talked about that the other day when it comes to in our business credit building challenge about assets and how you protect them by putting them in LLCs. Well, Oxygen will actually help you set up LLCs. They even give you cash back when you're using the debit card, which is interesting. You usually get cash back for using credit cards, but not cash back for debit cards. So that's a very unique feature and benefit that you don't typically see. And it's only, from what I've seen, available through oxygen.us. That's oxygen.us. So again, now we're starting to get a picture of what neobanking is. They deal with normal banking, checking account, savings account, money market. Sometimes it's their own license. Sometimes it's a big bank's license that backs them. And then we start to see that they're doing all these things, invoices, handling financial reports. We're seeing bookkeeping. We're seeing spending management, handling crypto, QR codes, easy ways to pay invoices. Some of them give us no overdraft fees, help us set LLCs, even give us features that we haven't seen before in banking, like cashback and debit cards. Now, if we look at the neobanking for the personal world, 3 top neobanks for the personal world, the very first one is called Chime. And I actually hung out with Chime when I was at this banking conference. They're pretty big. They've got almost 22 million account holders, like 21.6 million account holders. So they're getting to be a pretty good sized bank. They only deal with personal bank accounts though, and they also have no overdraft fees. a credit builder program to help you with consumer credit, high yield savings accounts, which usually is an oxymoron. We don't usually see high yields accounts at banks. And then we deal with the second of the top three here is Varo Banking. Not really familiar with them, but VARO money.com, VARO money.com, VaroMoney.com. They're not nearly as big. Chime has about 22 million. They have about five and a half, about 5.4 million account holders. And again, they also only deal with personal accounts, but they'll give you 6% cash back using your debit card. Think about that for a second. That's absurd. You use your debit card, 6% of your cash you get back. So that gives you like a 6% margin if you use your debit card to just pay stuff. That's pretty cool. You can't beat that. They also offer an option for getting an advance, for getting like some kind of like basically cash advances. It's starting with a $20, and they also work their way up to a maximum of $250. You're not going to get rich, but they do cash advances as well as cash back. So pretty interesting things that, again, that we really haven't seen be very popular. So that then we look at Varo Bank, which is another one. Then we look at one of the newest, hottest ones, which is called Current, Current. Now, Current has about 4.6 million account holders, and they offer both crypto and more traditional services like what we'd see through banking, but they also see financial services like we'd see through a normal financial group as well. So they make it very clear that cryptocurrency is not covered under FDIC insurance. We all understand that. Currently, crypto isn't covered under FDIC insurance. But think about this. You can't go into your bank and get crypto, like deal with crypto. These neobanks, as we're starting to see, a lot of them deal with crypto. They allow us the ability to receive and send money through crypto, which is interesting. It shows this segue into what we're seeing is potentially the future with some type of primary or multiple types of primary online currency. They don't charge any kind of overdraft fees, but they have way better interest rates and a higher APY, or an annual percentage yield on the savings account than what you'd ever find with a normal bank. And then they also round up purchases and deposit the remaining pennies into your savings pot account. So it's pretty cool. We see all this round up technology nowadays that helps you save money. Hey, you're going to spend $5.42, round it up to $6, and we send the difference of that money into your savings account. So it's actually kind of a really cool way to be able to save more money as well. But again, Bank of America offers that kind of the same kind of feature as well. So that's one feature so far we've talked about with neobanking here that we do see actually offered with one of the other conventional bank. Most of the times they don't. And somebody says, "Hey, is this info available in the partial portal?" It's partner portal. It's not as of yet, but I don't think in the partner portal. I don't think we have a PowerPoint on this because it's brand new. But I will talk to our partner success team. It might find its way there. And Tammy says, hey, Tammy here at Atlanta, Georgia's in the house. Thank you for joining in. So now hopefully you get a pretty good idea what neobanking is. You should, because it's big up and coming. Neobanking gives us the ability to now deal with these new fintech companies that are dealing with online banking services. And besides your traditional banking, checking, money market account, we're seeing stuff like helping us with payroll, helping us with overdraft. We're eliminating overdrafts, helping us with cash back on debit cards. We're starting to see features like our ability to accept crypto. We're starting to see financial reports and all these other benefits, payroll, things that we used to have to go to outside companies. A lot of them offer these kind of incentives for us as well. And they're easier to deal with, they're cheaper to deal with, and they're a really fantastic alternative to big conventional banks just because of their overall transparency. And I got to reveal something. The big banks are a little scared of these guys. I'm starting to see this coming from this big banking conference. Neobanking was one of the top topics we discussed. It's why I'm bringing it to you, because I'm fresh out of a banking conference in Las Vegas. All the rave is about neobanks, and the big banks are shaking in their boots. And so that being said, I think you should know about as entrepreneurs because it's easier to set up and use these kind of accounts in other places. Now, if you'd like to learn more, you can go to creditsuite.com. I think we've got a blog post on neobanking that's coming out or already is out. And then we also have a blog there. If you could just search bank on the best bank account to set up for your business and be able to set up a neobank account for your business to make it easier, faster to be able to access the money you need and to just make it more convenient with all these other tools and resources that are available. So now you know neobanking, no reason to drag this thing out. You know what's interested. We covered the top 3 personal and business neobanks. And now you know exactly how to use neobanks as an alternative to banking. Don't forget to grab your Check Systems credit report. You can go to creditsuite.com/check systems, CHEXSYSTEMS, Check Systems. And Check Systems credit report will give you your banking credit score and your banking credit report. You can clean that up. It even gives you the ability at creditsuite.com/check systems to get your free report, get your free score, and then also to dispute inaccuracies to make sure your reports are good to help you become more lendable. So thanks for tuning in. If you haven't already, make sure you like and subscribe. And I look forward to seeing you on our next training where we talk about more cool ways to get the money